Hello students. Today I am going to discuss about restatement of creditors and debtors as on reporting date. I will explain you the meaning of debtors and creditors as well. So before proceeding for today's class, I would request everyone to subscribe to my channel so that any new update or new videos uploaded you can see it on time. Okay, so let's start with the meaning of debtors and creditors. So we'll try to understand with an example who is a debtor and who is a creditor. Okay, so let's take two companies. Okay, ABC Limited, it's a manufacturer of cars. So ABC Limited is manufacturing cars, and there is one more company named Ram Limited, manufacturer of tires. So what Ram Limited is doing? Manufacture of tires. Okay. Now, ABC Limited purchased 200 tires at the rate of 1000 each. So ABC Limited, because it is a manufacturer of cars, raw material is tires. So it is purchasing from Ram Limited tires. How many tires? 200 tires. And what is the cost? It is 1000 rupees cost. Okay. Now let's see how the purchase by ABC and sales by Ram Limited is accounted in their books. Let's see how they're going to account it. Okay. So now, if you see in the books of ABC Limited, who is Ram here? Ram is the company who has given these tires on credit, right? Because ABC Limited has not paid to Ram Limited. So these tires are purchased on credit. So when it is on credit, Ram Limited is a creditor, right? There is another name for creditor that is called as supplier. And if you see from balance sheet point of view, the name given to creditor or classified under a bigger bucket, which is called as accounts payable. So under accounts payable, there will be multiple creditors like Ram Limited, XYZ Limited. Okay, so all those will be accounts payable. Now, because this is all liability, right? This is all liability. Okay, so this will form part of the liability in the balance sheet. Okay. Now coming to Ram Limited, in the books of Ram Limited, ABC Limited is the company who has purchased these tires from Ram Limited, right? So ABC Limited is a debtor. Okay, and these debtors are called as customer as well. And in a bigger picture or in balance sheet, it is grouped under accounts receivable, right? So different customers will be grouped together under accounts receivable. And as this is the money which the company is expecting to be received in near future or by the payment due dates, this is called as an asset, right? So debtors are assets, creditors are liability. Okay. So if you see more about debtors and creditors, you can understand by this transaction. ABC Limited has to pay, okay, has to pay rupees 2 lakhs. Why 2 lakhs? 200 tires at the rate of 1000 each. To Ram Limited for purchasing tires, correct? ABC Limited has to pay. Has to pay means Ram Limited is the supplier or creditor. Now Ram Limited has to receive, correct? Because he has sold to ABC Limited, have to receive rupees 2 lakh from ABC Limited for selling tires, correct? So when you have to receive from other person, he is a debtor, and when you have to give it to someone, he is your supplier or creditor. So what are the accounting entries we are going to post now? In ABC Limited, the entry is inventory account debited 2 lakhs to Ram Limited 2 lakhs. Correct? This is the creditor. Increase in liability is always a credit, hence to Ram Limited. In the books of Ram Limited, the entry what Ram Limited is going to post is ABC Limited account debited 2 lakhs, correct? Because it is a customer balance, it is an asset. Increase in an asset is always a debit. To sales, because Ram Limited is generating income. So to sales rupees 2 lakh and income is always credit, correct? So this is the entry. Hope you understood what is the meaning of creditors and what is the meaning of debtors. Now I will explain you about restatement of debtors and creditors balances. Before explaining, I would like to explain more about restatement. What is the meaning of restatement? So the accounting standard says that if any company deals with foreign currency, For example, you have sold outside India or you have purchased metal from outside India. In that case, if you have created any liability in foreign currency, then you have to revalue your assets, your creditors or debtors as on the reporting date. Okay, so how it has to be done or how the calculation has to be prepared, I'll explain you along with the example. Now let's take this example. XYZ, which is located in India, is a manufacturer of car. Okay, I'm taking the same example of car and car tires so you can connect easily. So XYZ Limited, which is located in India, is a manufacturer of car, and Sun Limited, which is located in USA, is manufacturer of car tires. Okay, so you can see both are located in different countries. Now, what is the transaction we are going to have? XYZ Limited is purchasing tires from Sun Limited. Okay, purchased 100 tires at the rate of $10 per tire. So Sun Limited is selling to XYZ each tire at the rate of $10. And how many quantity XYZ has purchased? 100 tires. Okay. Now, these tires shipped on 11th January. That means Sun Limited has shipped this material on 11th of January, and it took near about 2 months plus. Tires received in factory and invoice processed on 20th of March. So XYZ is receiving the tires in the factory and processing the invoice on 20th of March. And what is the payment terms? Payment terms means after how many days XYZ Limited is going to make payment to Sun Limited. What is the payment terms means how much days credit XYZ is going to enjoy. Okay. So payment terms equal to 30 days from the date of receiving goods. So on what date he has received the goods? On 20th of March. So when is the payment date? Payment date is 19th of April. Okay. So there are 3 dates here. 11th January, the day the shipping is happening, then 20th March and 19th of April. Okay. Now we'll see what are the accounting entries. Now XYZ is going to post, the buyer, right, which is located in India. So coming to the accounting entries, the first entry the company is going to post is on 20th of March. Why? Because on 20th of March, the company has received the tires in the factory and the invoice processing is happening on 20th of March. On 20th of March, the accountant is going to post this invoice in the accounting software, right? So what is the entry he is going to post? Before that, we need to understand that the day the invoice will be processed, the exchange rate will be taken for that day. And generally, every company will be maintaining the exchange rate. Okay, few companies they link it to any specific bank, few companies they maintain the rate as per the customs. But in practical sense, it depends from company to company, they maintain their exchange rates. So for example, here on 20th of March, 1 USD equal to 79. 1 USD equal to rupees 79. So one tire, what is the cost now? USD 10, right? So 790 rupees. 79 into 10, 790. So what is the accounting entry to be posted now? Inventory account debited 79,000 because 100 tires purchased, right? So 100 tires into 790 is 79,000. To Sun Limited 79,000 because Sun Limited is a creditor. Okay. So this is the first entry at the time you are doing entry in the accounting software on 20th of March. Now after the payment terms, that is on 30th, when you're going to make the payment, for example, on that day, 1 USD is rupees 80. So what is happening here? In the previous entry, the entry was for 79 rupees, but after 1 month, the exchange rate has increased by rupee 1. So payment what we are going to do is $1,000, right? For 100 tires, we are going to pay $1,000. So what is the entry we are going to post? Now Sun Limited, here we have created a liability for 79,000. Now this liability, you can't change every day based on the exchange rate. So whatever liability you have created, the same has to be debited here. So Sun Limited account debited 79,000. But in actual, what amount I am going to pay? To bank 80,000, because by paying 80,000, you can buy $100,000. By paying 80,000, bank is going to give you $1,000. So what is happening here? Your liability is 79,000, but you're paying 80,000. The difference is called as forex loss account thousand, which is a realized loss. Why it is a realized loss? Because you are making payment to the vendor, and this is the loss you are incurring because of the forex movement, because of the movement of forex in last 30 days during the payment terms. Okay. Now, before we go to 19th of April and book a realized loss of 1000 rupees, now I am going to explain you about the restatement, when we have to restate the balances. So on 31st March, okay, because we purchased in the month of Jan, material reached in month of March, and the payment due terms was 19th of April, right? Now in between, before making the payment on 31st March, we have to restate our creditors and debtors balances, correct? So this is as per the accounting standard, we have to restate the balances outstanding to our foreign parties. Okay, so on 31st March, for example, 1 USD was 81 rupees. 1 USD was 81 rupees. So now to restate the creditors, what we need to do? Sun Limited creditor balance was 79,000, correct? Because on the day of accounting in accounting software, it was 1000 USD into 79 rupees, okay, on the accounting date. Now restatement of foreign currency outstanding. Now we have to restate as per the accounting laws requirement. At what price? It is 81 rupees per dollar. So $1000 I have liability at the rate of 81. The liability, restated liability is 81,000 rupees. That means in my balance sheet I have to show payable to creditors at 81,000 rupees. Okay, so liability to be increased by rupees 2,000. That is 81,000 minus 79,000 already what is accounted. So I have to increase the liability by 2,000 rupees. Now question arises, why the accounting standard requires us to restate? Because if you see in reality, okay, if on 31st March you are going to settle the account of Sun Limited, that means if you are going to pay on 31st March to Sun Limited, you have to pay 81,000 rupees to the bank to buy $1,000. Okay, so this is more of a conservative view, or you can say that the fair value at which you are going to settle the creditors or debtors on the date of reporting. Hence, this has to be done. But if you see on the accounting entries, the interesting part here is that the difference of this 2000, what we derived, it goes to unrealized forex loss, 2000 rupees to Sun Limited 2000. Question is why it is unrealized? Because we have not paid nor we have bought this money from the bank. It is only just restating the creditor. That means on 31st March, if I have to pay, what is the scenario? If I have to pay to Sun Limited and settle it on 31st March, what is the amount I am going to pay to Sun Limited? So it is an unrealized forex. Okay. Now this unrealized forex, which is created on the reporting date, has to be reversed in the subsequent date. Like in this case, Sun Limited creditor revised balance. Okay. This is the revised balance, right? Or you can say restated balance, rupees 81,000 rupees. And above unrealized forex loss entry will be reversed on 1st April, because this is unrealized. Company is not going to hold it for a long time. After the reporting date, company is going to reverse it, and which is realized on 19th of April. What we saw in the previous page, on 19th of April, when the payment will happen, the loss of 2000 rupees or 1000 rupees based on the exchange rate on that day will be the realized forex. Hope you understood. And similar manner also the debtors will be restated. If you are selling anything to any country and on the reporting date you want to revalue, then you have to restate your debtors as well. Hope you got clarity about debtors and creditors and how the restatement has to happen. Please share this video along to your friends so that they also understand how the restatement happens. Thank you.